Alright, so you are welcome to this video part 2 of the first video on top-down analysis. So I'm going to explain today we are going to explain how the day trading and the scalping works, how they do their perfect top-down analysis in the market, right? Note, we are not here to analyze market. We are here to reveal the secrets of the top-down analysis, how it is being done, right? We have already explained how the scalpers move and do their top-down analysis. If you haven't watched my first video, you have to go back and watch it so that you won't get lost. So for the day traders, like I told you guys, day traders are traders that spend hours in the market, right? They spend hours in holding a chart, right? Or they even spend the day. So now if they want to analyze the market, normally they move to the daily time frame. What do they check in the daily time frame? They check the overall trend of the market. As you can see, this is BTC, right? You know, we are analyzing BTC. The overall trend is going bullish, right? It's going bullish in BTC. This is just a retracement to go by in the daily time frame. They also move down to the 4-hour time frame. What do? Normally they do their market structure in the 4-hour time frame, right? They do their market structure in the 4-hour time frame to know the direction of the market. Like you can see here is a break of structure here. There's a break of structure that happens here, right? There's a change of character to the upside that tries to happen here, but unfortunately market do not change the character, so that's a liquidity zone because there is already a break of structure here. What are we expecting? We are expecting market to sweep this liquidity before dropping, right? So this is trying to tell us that this market is going down. All right, so they move down to the 1-hour time frame. So the market is going down in the 1 hour. This market is going down. We have a break of structure here, or I can say shifting market structure here in the 1-hour time frame, right? So this shifting market structure, what it's trying to explain to us is that market is moving bullish again. So what do we have here? We also have another liquidity area here. So market is moving bullish again. That is what the 1 hour is trying to explain to us. So what is going to happen here? We have an order block here, which we already explained in the scalping strategy. We have an order block here. What this order block is trying to tell us that that's our point of interest. So what are we going to do? We wait for market to drop down to our point of interest. If market drop down to our point of interest, we go back to our 15-minute time frame. That's where we are going to take our entry, right? If this market move to our point of interest, is now in our point of interest, that is not going to be a point of interest anymore. It's going to be our area of concentration, because we have already marked it out in 15-minute time frame. It's going to be our area of concentration. So what are we looking? Actually, we are looking for institutional reference points in the smaller time frame. We can yes, day trader also make use of 5-minute time frame to do what? To check for shifting market structure. So they are expecting market to drop here, just let a shifting structure happens in this our area of concentration. Once we just see the shifting structure, boom, we are okay to take the buy. We are okay to take the buy because this liquidity has not been swept. But if this liquidity is if the market happens to sweep this liquidity, definitely what are we going to expect? We are going to expect this market to drop in somewhere else, maybe in this liquidity area, sweeping this liquidity as well, giving us a shifting structure to the top, and we sell down to this other block area, because there is still market leaf confluence, and definitely it has to take out all its confluence before keep moving. So as you can see, with just this small analysis and insights, I believe you know how day traders normally analyze their market. Day traders move to the daily time frame to check the overall trend, down to the 4-hour time frame to put their market structure, 1 hour time frame to mark out their point of interest, 15-minute time frame to know their area of concentration, and 5 minute or 1 minute time frame to check for institutional reference point, which is change of character. Then go back to the 15-minute time frame to take their trade. So this is all for the day trading. I believe you guys understand very well. So let's move to the scalping. All right, so let's talk about the swing traders. Sorry, my bad, I say scalping. We are done with scalping. So let's talk about the swing traders. If the swing traders want to analyze their market, what they normally do is they move down to the monthly time frame, down to the to check their overall trend of the market. I'm not a swing trader, rather, so I might not explain much more better on it. So if they want to analyze the market, they move down to the monthly time frame. From the monthly time frame down to the weekly time frame, they normally execute their trade on the daily or the 4 hour time frame. As you all know, how we take the process of scalping and swing trading and scalping and the day trading. So that's the same process you are going to take in the swing trading. It's just that the time frame is different. But note, swing traders stay too long in the market, too longer than expected. They spend almost a week, more than that, even a month can be spent for a swing trader to hold a trade. So you have to see where which one are you better on. If you are the type that can hold a trade for hours, so you can be a day trader, go for the day trading. If you are the type that can hold a trade for just few minutes, you can go for swing trading. So thanks for watching, guys. Follow, like and subscribe. I'll be dropping meaningful content each and every day. So thanks for watching.